Hello, it is Crypto Tuesday, September 14th, year of our Lord, 2021. We're going to talk about the new rules that they're applying to crypto. They're never ending, it'll never stop, and we'll begin with that. Okay, welcome to the show. It's Crypto Tuesday, my favorite day of the week. Let me scoot over a little bit here. I wanted to, there's some things going on with the wash sale rules. We talked about wash sale rules earlier this year about how crypto can help you save on your taxes by being able to deduct losses, because the wash sale rule does not apply to property, only to securities and stocks. But they're trying to change that rule and trying to take any benefits from crypto and wring every dollar they can from it. As I've been mentioning now for 18 months, they've been pounding on the three boogeymen: cryptocurrency, the tax gap, and the wealthy. These three are, and all of this new spending, trillions of dollars, 4 trillion, 6 trillion, depending on how you count it. It's all going to come out of those three people. Those three boogeymen, because they're not really people, right? They're going to squeeze every dollar they can out of there. And so don't worry, America. We won't have to pay any more taxes, because all the rich people are going to pay for it. And the businesses and the corporations and crypto investors and the cheaters, that's who's going to pay for all this. So you don't have to worry about it, America. You will not be taxed on this. But of course, who does pay the taxes on all of that anyway? It's you and me anyway. So let's talk about the first story. I got to get rid of that. So the first story is crypto may soon be subject to the wash sale rules. And as I mentioned, they are not now. And there's a very good, I'd explain what that is, but there's a very good explanation in this story. And so let's begin with the story. Okay. The highly controversial infrastructure bill is being looked at by the Ways and Means Committee. The committee in Ways and Means is the chief tax writing committee in the United States House of Representatives. The committee has jurisdiction over all taxation, tariffs, and other revenues. Revenue-raising measures, and a number of other revenue-generating programs. Ways and Means summary report published on September 13th talks about subjecting cryptocurrency to the wash sale rule. Cryptocurrencies are not subject to the wash sale rule at the moment. This loophole has allowed crypto holders to generate tax losses without economically realizing a loss and artificially reduce their tax bill. Actually, it's not a loophole because it's part of the law, right? I guess it's a loophole in the sense that you can take a loss, and you can on any property. So when they define it as property and not securities, then this is what comes along with it. But like everything else, they just change the rules, right? And so now it'll apply to crypto as well. So here's a very good explanation. According to 1091 of the IRS code, a wash sale occurs when an individual sells a stock or security at a loss, and within 30 days before or after this sale, buys a substantially identical stock or security or acquires a contract or option to do so. The current language only subjects stocks and securities to the wash sale rule. Since cryptocurrencies are treated as property per IRS Notice 21421, they are not subject to the wash sale rule. So that's a benefit that owning crypto can provide to holders and help to offset capital gains, right? So if I take capital losses, I can offset capital gains. Let's see how the wash sale rule works with stocks and cryptocurrencies next. Assume Jay buys a share of company A stock for $2,000 on January 10th, and on January 15th, stock A stock is trading at a much lower price of $1,200. If she were to sell her position and buy another share at $1,200, she would not be able to claim the capital loss of $800 due to the wash sale rule. Therefore, $800 loss is disallowed under the wash sale rule. Substitute company A stock with Bitcoin or any other cryptocurrency. Here, she would be able to claim the $800 loss as a capital loss because cryptocurrencies are not subject to the wash sale rule. The loophole allows crypto holders to trade cryptocurrencies which act just like stocks, but they don't act just like stocks because there's no equity in a company, so it doesn't act like a stock. But under the tax treatment of property, and generate losses more aggressively by skipping the 30-day rule. Section 30 of the Ways and Means summary document plans to subject digital assets to wash sale rules. This section includes commodities, currencies, and digital assets in the wash sale rule. An anti-abuse rule previously applicable to stock and other securities. The wash sale rule in Section 1091 prevents taxpayers from claiming tax losses while retaining an interest in the lost asset. The Ways and Means Committee reasoning behind the proposal is clear. Cryptocurrencies do not exist when Congress enacted in 1091, so it doesn't have any reference to digital assets. Therefore, cryptocurrency holders have no legal requirement to apply this provision, although cryptocurrencies work very similar to stocks and securities. Closing this loophole would generate the additional tax revenue needed to fund the massive infrastructure bill. Closing this loophole doesn't mean the crypto taxpayers are completely missing out from the tax benefits related to the wash sale losses. The wash sale rule doesn't allow you to deduct losses on transactions that are considered wash sales. Instead, it allows you to add disallowed losses to the cost of the bit. Now it gets complicated about what you added to it. So you get to, it's really deferred. Okay, so one of the things, so like last year, at the end of last year, if you're doing your taxes, and you had some capital gains and crypto was down. So you hold some crypto and it went down. The value of what went down. You could sell the crypto, get the capital loss and buy it right back. So I get the loss for next year in my tax return to offset my capital gains. And then but I still hold the cryptocurrency. And when they call this a loophole or somehow imply that somehow this was underhanded or nefarious, nothing could be further from the truth. It's what the law allows. And that's the way you're supposed, right? The law, am I supposed to voluntarily apply the wash sale rule, even though it doesn't apply, even though all the tax benefits that come with being a stock or security, I don't get as being a cryptocurrency? So they're trying to have their cake and eat it too, and of course that's what they will do. They will have both, right? Because they've been targeting crypto because crypto is seen as evil, and somehow tax avoidance when all it is a new way to invest, and they want to end it that way, and it's just. And so they will find any way they can to do that. Unfortunately, the burden of tracking wash sales and adjusting basis accordingly to fall on the cryptocurrency exchanges. So all of these reporting rules will fall on the exchanges, and the exchanges, they'll just eat it so they won't charge you. No, they won't. Right? They're going to charge. They have to. They're going to recoup those losses by charging more. They have to. And we'll get to another story in just a minute about the changes and the taxes that they want on all trades. So not only will you pay more for every trade, but you'll pay a tax on every trade. So it'll even go up more. That's our next story. Unfortunately, the burden of tracking the 1099-B reporting under the infrastructure bill, taxpayers will also have a responsibility to track wash sales occurring across multiple exchanges and wallets. If the Ways and Means Committee suggestions are adopted, cryptocurrency trades occurring after December 31st, 2021 will be subject to the wash sale rule. So again, the wash sale rule was a benefit for cryptocurrency holders. It will be now eliminated. And whether that's a good thing, bad thing, indifferent. Now, we were just talking about, I think it's a bad thing, to be honest with you, because they're trying to many governments. We just saw China is trying to stop cryptocurrency. Ukraine just legalized cryptocurrency, but many countries are trying to downplay it or eliminate it. I think the SEC here is going against, although it's not a security, they're using their rulemaking ability to go after. They're using their rulemaking ability to go after crypto and tax the exchanges as if they were securities. But we already know that they're not securities or stocks. Yet the SEC wants to take action as if they were and tax them. And so that's our next story. So let's talk about the next story. Uh-oh. Unlock my benefits. Okay. So government favors taxing cryptocurrency trades. Yes. So they want to. So cryptocurrency trades and ecosystem could be taxed in the near future. Sources told this outlet. The tax department favors taxing cryptocurrency exchange and trade in the country, but if it doesn't mean that they would be categorized as a valid asset class. So they're trying to have it both ways. They added that the government feels that an activity that generates income should be taxed, right? If it moves, tax it, right? The news comes at a time when there is a raging debate over how to treat cryptocurrencies. The RBI has also said that it will launch a pilot of its digital currency by the end of the year. So again, this is another way to go after people who are trading in cryptocurrency and gather tax revenue. Now, many people will say, well, that makes sense. Let's get all the taxes we can. But when you tax things, especially at this infant stage, you're more likely to do it harm rather than help it. We should be encouraging cryptocurrency and not hampering it. But the government wants to hamper it for many reasons. One is that they feel a threat to the U.S. dollar as the predominant currency in trading in the world. And so I believe that the IRS and the SEC and every other government agency will do all they can to hamper and impede the growth of cryptocurrencies. And one way to do that, right, if you tax something, you get less of it. So the more they can tax, the less that we'll have of it. And now some people have made a lot of money in cryptocurrency, but many people have not, right? And even people who have traded, I have many clients who traded crypto and didn't make a lot of money trading crypto, yet the IRS is coming after them very strongly about it. So that's where we are today. The wash sale rule, I think, I was encouraging people to use the wash sale rule for their taxes this year to offset some of their capital gains. Perfectly legal advice. That's what we do at Open Tax Advocates. We give good advice to people on how to save money on their taxes, right? We help with fighting the IRS, either if you owe them money or if you will owe them money. If it comes to structuring your business, that's what we help people do. If it comes to, buying and selling for tax advantages, everything you do has a tax advantage. You should be aware of it when you do it, because sometimes when you do something, the tax disadvantage might offset what the advantage is, and so you should not do it. And I think we overlook that a lot, especially when it comes to capital gains. We know that the new bill proposed is going to raise capital gains tax. And what that will do is it will stop people from selling assets that they otherwise would sell, because if they don't sell it, then they don't realize the gain. Now, the next move, I think, by the government is to tax you even if you don't sell it. Even if so that's where they are now. Well, rich people don't sell their assets, and it still goes up, and we should tax them. And again, it's just another way to harm our society, in my opinion. So if you're fighting the IRS, if they're coming after you because you owe them some money, well, then you should get a copy of my book, Deal with Your IRS Problem Today. Too many people put it off too long. So don't put it off. Deal with it today. Deal with your IRS problem today. Get the book. Go to freeirsbook.com, freeirsbook.com. Get yourself a copy of my book. Again, if you're having some issues, you like and subscribe to the page. Like it on Facebook, subscribe on YouTube. If you subscribe, put something in. It is Crypto Tuesday. There we go. September 14th, year of our Lord, 2021. We're going to talk about what happens when you do this yourself. New rules that they're applying to crypto. They're never ending. We can listen to the show again. Okay, so like, share, subscribe. Thanks so much for joining us, and we'll see you tomorrow here on today's Tax Talk. Thank you so much.